hello again, Solis family. Greg Solis here with the update. First of all, those that attended the client appreciation event, I hope you had a great time. I know we sure did. It was a gorgeous evening. The environment was wonderful. The food was great. The ambiance was perfect. But most importantly was getting together with you all. We just love getting together with you. And again, it's our way to say thank you, a small token of our appreciation. And it certainly was a wonderful evening. For those that weren't there, we missed you. I sure hope you'll try to make it next year. Again, it's just a great event. A lot of connections, a lot of great fellowship, great camaraderie, and just an awesome time. So thanks again. We're going to try to get a video out here in the next couple of weeks that'll give you some highlights of the evening. So watch for that. That should be out here in the next week or two, and we'll get that out to you. So I hope you're doing well, and we certainly are doing well here at Solis Wealth Management. Again, we appreciate your trust and confidence. And this is kind of that time of Thanksgiving where we have opportunities to let you know how much we appreciate you and how thankful we are and how grateful we are to be able to do what we do. All right, market-wise, well, it's been a crazy week. Of course, the government shutdown. If you recall a while ago, I said, usually these things only go a few weeks. Well, we ended up going 42 days. It ended up being the longest government shutdown of all time. That's crazy. The last one was 2018, 2019, and that was just about 35 days. So we went 42 days with the government shutdown. Well, from an economic standpoint, that created some challenges just from a standpoint that we were kind of flying blind. We didn't get the employment reports. We didn't get the inflation numbers for October. And so it made it a little tough to kind of figure out, well, what's going on economically? It really did create some uncertainties. And as you know, uncertainty is usually not a good thing for the market. Most economists don't think it's going to impact the GDP numbers that much. That's the good news, but it did create some uncertainties. And so the market's not quite sure what to do. As I record this, we're seeing a little bit of a pullback. The Dow actually is holding up pretty good. The Dow's only down about 1.5%. The S&P 500 is off about 2.5%, but the Nasdaq's down just about 5%. So we're seeing a big pullback, particularly in the tech stocks. I think there's a concern of valuations on particularly the Magnificent Seven. The AI stocks have really had big run-up. So I believe this is some healthy consolidation. I don't see any big concerns just yet. As a matter of fact, if you look at the so-called PEG numbers, the price earnings to growth numbers, and that's something we watch to evaluate, is the market too high? Well, the PEG numbers with these tech stocks is not that high because the growth is pretty extraordinary in some of these tech companies. So we're looking at 22% growth in earnings over the next year is what we're projecting on some of these tech companies. And that means the valuations, or so-called price earnings multiples, are not that high. So I think it's healthy we're getting consolidation. The valuations are still a little high, but relative to the growth of these companies, it's not out of line. So we're still optimistic. We think that it's probably a good opportunity to have some buying opportunities during these pullbacks. We think that the numbers are still going to look okay as far as the GDP numbers, the inflation numbers, the employment numbers, although we're seeing some softening for sure, which might give the Fed an opportunity to reduce rates. Although that we saw those projections coming down a little bit too. We were anticipating about a 62% chance that they would lower rates before the end of the year, but now it's right around 49-50% chance that they'll lower rates. So we'll see how that plays out. We do think that going into 2026, we will see rates slowly decline. We don't see them going back up. So that's the good news. That should help the market rally. So overall, everything's in pretty good shape. Just getting some pullbacks right now. The bond market's holding stable. 10-year treasuries right at about 4.10%. So we've seen a little uptick there, but nothing major. So overall, all is well on our end. I hope you and your family are well. Of course, if there's questions or concerns, you know we're always here for you. My very best to you and your family. Take care and God bless.